See, there are multiple reasons why we decided to migrate all our traffic from a large legacy bank statement analysis company to BankConnect. With BankConnect, we saw huge improvement in our fraud detection rates, as well as there was a significant reduction in false positives. We have seen quite a remarkable improvement in overall our conversion rates. In fact, 17% increase in approval rate has just happened because of this new feature which we have jointly developed with FinBox. See, there are multiple reasons why we decided to migrate all our traffic from a large legacy bank statement analysis company to BankConnect. Primary being fraud detection capability, analytics quality, speed of the solution, as well as much better unit economics. With BankConnect, we saw huge improvement in our fraud detection rates, as well as there was a significant reduction in false positives. Second best thing is speed. BankConnect is much faster compared to any other alternative which is available in the market. Since they are fast, they are also able to analyze the statements in real time and provide the users with the necessary feedback. Further, if say there are missing transactions in the bank statement shared by the user, in the real time, again the user will be prompted to give the bank statements for the missing months. This instant feedback loop reduces the overall drop-offs and has also helped us in improving our conversion rates. Third would be the analytics quality and the team support which they provide. See, we do a lot of MSME unsecured loans, and BankConnect's quality of extraction in terms of income estimation, loan obligation detections, as well as CCOD limits detection is quite great. BankConnect has been able to identify self-transfers as well, which I would support, or I would say is a unique quality and not available in any of the alternatives which are there in the market. Obviously, no solution is perfect in this area or with any of the alternatives, but what we really like in FinBox BankConnect is the team listens to the feedback which we are sharing and reiterates quickly on providing a solution. Overall, I would rate their team as quite agile, quite smart, and we are able to build a lot of custom reports as well as analytics with this. Last would be obviously unit economics. See, cost obviously is a big issue when we are doing large scale underwriting. And in terms of parsing, obviously your cost can balloon in case not controlled. Obviously there are a lot of cheap alternatives available in the market, but why we chose FinBox is because they offer a product that is at par, or I would say much better in terms of multiple analytics capability as well as the quality of reports, and it comes at almost a 30% lower cost compared to the other alternatives. Although we also explored other cheaper options, but quality was a huge problem with them. This in fact I would say is a dilemma which most other digital lenders also face in the market. So basically ensuring the right amount of risk checks without adding any additional friction in the customer journey, it's quite a delicate task and needs quite a lot of balances in place. Over the years we have been able to strike the right balance, and the complexity of our lending policy is a testament to that. If you look at our lending policy, you will be surprised to see how layered it is. Our lending policy is quite meticulously designed, forming a complex workflow that addresses every possible scenario which exists. And the kind of sophistication which we have been able to put in these policies would not have been possible without the technological backing of FinBox. So let me put these things in perspective. Now it so happens that insights from one BankConnect account might be insufficient for a particular loan product, and it may require the applicant to basically upload additional bank statements for basically arriving at the right kind of loan amount as well as the right interest rate. This is where FinBox rule engine or the business rule engine or the Sentinel comes into place. It basically nudges the customer to upload the second bank statement on the fly, and within microseconds, or in fact I would say nanoseconds, it's able to pass that bank statement and give us a consolidated output to take the right loan amount to the customer. While all this happens in the backend, the user is basically able to finish off his journey in a matter of, I would say, less than 3 minutes. Bank statement based underwriting is obviously ridden with multiple challenges such as inconsistent file formats, missing transactions, some intentional, some may be accidental, and in certain loan products, user may have to upload multiple bank statements, all of which increases the likelihood of drop-offs. With BankConnect, we have been able to smoothen the overall process and bring in efficiencies at multiple levels in the funnel. What I love about BankConnect is how the product iterates promptly for operational efficiencies, whether it is with supporting a new bank statement template, adding new predictors, or customizing the dashboards which our underwriter uses. In fact, BankConnect recently helped us with customizing the CCOD format reporting. It so happens sometimes that the bank statements which the BankConnect is parsing might not be reflecting the CCOD activity, and balances generally tend to run in negative. Now with the new journey which the FinBox has built for us, we can proactively identify such cases and nudge the applicants to correctly identify and input the CCOD limit and independently help us in verifying the same. What this helps us is proactively catching such cases on the fly and without negatively affecting the overall eligibility of the user. Further, it also improves the overall end user experience, and simultaneously on the dashboard the underwriter is able to correctly decipher the limit as well as correctly decision the case. Now this is just one of the examples of BankConnect, how it brings us efficiencies and simultaneously also helps in solving the drop-offs issues. If I were to put a number to this, we have seen quite a remarkable improvement in overall our conversion rates. In fact, 17% increase in approval rate has just happened because of this new feature which we have jointly developed with FinBox. This explains why other NBFCs which are operating in similar loan space or similar loan product segments, they have an AA adoption rate of closer to 10%. At IIFL, with FinBox and AA multi-bank switch, we are able to significantly improve our conversion rates, and it stands at a remarkable 41% as of now as we speak. And this improvement in AA adoption rate is directly correlated to a reduction in overall customer acquisition cost also. See, when it comes to consumer lending, this is not a major challenge. However, when it comes to business loans, without consolidating reporting across multiple bank accounts, underwriting is likely to fall short and might be risky, because you might end up giving loan to a customer who might not be credit worthy, and overall that can balloon into higher losses for you. Hence, it is very crucial for us to basically select a vendor that supports multi-bank format data processing, right? And a BankConnect has been sufficiently and correctly able to identify as well as solve that problem for us. In case what other lenders call soft reject, where a single bank statement proves insufficient for the underwriter to exercise and basically take the case to closure, in BankConnect we have been able to basically decision that case because of the capability of supporting multiple bank statements. In fact, FinBox offers a solution to support 5 bank statements on the fly and gives us a consolidated report to the underwriter to finally decision a case. This not only helps the underwriter to basically approve the case, in fact we have been able to reduce our rejection rates also to a large extent, and simultaneously it has also helped us in increasing our ATS, basically which is the average ticket size, by almost 3 to 4 lakhs on an overall AUM basis.